Welcome to Open House, the real estate and mortgage show on News Talk 580 CFRA.
With Frank Napolitano and Paul Rushforth, here is Steve Gregory.
Welcome to the last weekend of February.
Hallelujah.
How did this happen? Yeah, no kidding, eh? Hey, Frank, we have a full studio,
sir.
and you and Paul are not in the studio.
So the studio's got lots of brains in it then.
Oh,
That's
plenty
what
of
you're saying?
brains. I mean, aside from me, there's even more this weekend.
Wow,
Jonathan is in
wow.
for Paul. We got Sean Reed here. Greg is here. The whole gang is here.
Yeah, we are.
Except
And
for Paul and I.
I just said I'm usually stuck in the corner, but I feel like I'm moving up in the world. I'm in Frank's seat here.
He's got the big chair, Frank.
There's a little bit of an
That's
indent,
awesome.
though.
That's awesome.
Now, are you away trying to make sure we don't get tariffs next month? What's going on?
That's what I'm working on.
That's what I figured,
because
yeah.
Public relations.
Yeah, we don't need them. We don't need them, but we're going to get them. It sounds like we're going to get them, but we don't need them. But if anything, it'll help renewing mortgage holders because if tariffs do hit, I mean, I certainly anticipate interest rates coming down. So sometimes you need to get bad stuff to get good stuff, and it's unfortunate that the world works that way.
Well, right now they have it at 30%, according to the economists, of going down another quarter point in March. What do you think is going to happen?
I think actually, unless the tariffs really go high impact at that first week of March, I mean, we've got the labor report coming out on the 7th and then the 12th. I think the more interesting date is April 16th. I think that's going to be the bigger date where we're going to have more data. I think, I think they're correct. I mean, there's maybe a 35% chance of prime rate coming down a quarter point. In the U.S., it's a 0% chance. So if anything, I mean, I feel like we're going to be in a good spot to at least have a better idea after that labor report comes out on the 7th. And at the same time, we'll see whether tariffs have been implemented or not.
Yeah, because we got two tariff dates, right? We got three, actually. We got the March 4th, which is the 1 month. Then we've got March 12th, which is steel and aluminum. And then now we've got the auto sector on April 2nd.
And he'll have two or three more, I'm sure, by the time that we get to March 12th anyway. So, at the end of the day, I don't even know that anybody in his own field knows what's going on. So,
let alone his own mind.
Yeah, you're right. I mean, I mean, this is the most, and talking to clients this week, this is the most uncertain times that in my lifetime that I've experienced where generally we have a good idea of what's forthcoming. We are in a scenario now where we have no idea what's going to come. Is Canada going to retaliate really heavy with the tariffs or not? How are these tariffs going to I mean, it sounds to me like the auto industry is going to get hit the hardest, and that's a lot of jobs that are lost in Ontario alone.
Oh, it's
so
huge.
Generally speaking, it's massive. When that happens, generally speaking, stimulus packages come into play, and Bank of Canada's got to get really aggressive at lowering interest rates to help businesses survive and to keep people employed. So
the other thing, by the time April
times
comes around,
before.
Frank, is we're going to have a new prime minister, and we may be in another election by then.
100%. We've got the Ontario one, which seems like a given right now of who's going to win, but you never know. I mean, we never know with these things anymore.
No, I know, but federally, by the time by the time the Bank of Canada takes a look at April, we're going to have tariffs to look at. We're going to have inflation to look at. We're going to have an election to look at, a new prime minister to look at. My goodness.
That's why so much happening that really everything is these balls are all up in the air, and we have no idea where they're going to land right now.
The only guy who knows what's going on right now is Jonathan, who's going to tell us exactly what's going to happen in the next month in housing here.
Let me just look into my crystal ball here and let you guys know exactly what's going to happen. Like Frank was saying, there's a lot of uncertainty out there right now.
How's the week been?
Week's been good. You know what? I feel like a lot of people are trying to usher in their own spring, even with all the snow. There's been a lot of listing appointments this past week, a ton of listing appointments. Some people getting prepared for the spring market, other people that are going, hey, let's get this going right now. I don't want to compete with the spring market, but it was a busy week for listing appointments.
And what about what about buyers? Are they out looking?
They're out looking, but they're still
tentative.
Yeah, that's it. They're not quite pulling the trigger yet. I was out yesterday on showings. We found a couple of places that people like, but they're just a little tentative. That and March break's right around the corner. You got some people who are traveling, and they're going, you know what? We'll wait until we get back. We're more focused on our vacation right now. We're out looking, but we're not going to pull the trigger until we get back.
Are they concerned about rates?
No, No, not getting a lot of rate talk right now.
They're not waiting until March 9th or April 16th?
No, definitely not. More uncertainty with the tariffs, for sure, and our election. Like the election coming up, Ottawa being the government city that it is, it's a lot of uncertainty with the election coming up. Nobody knows where it's gonna go. So a lot of the government workers are kind of throwing up their hands right now and saying, hey, let's just wait this out. We're going to see what happens here in April, and we'll go from there.
So we may not have much of a spring market at all.
You know what? Again, I wish I had that crystal ball.
So many balls in the air.
There's so many balls in the air, but my prediction is, it'll be a later spring market. I think summer's going to be busy. Once some of these balls land and people have some certainty, I think summer's going to be busy. But again, people need to move. There's always people that need to move. So you work hard at it, and there they are.
It's going to be so interesting. I can't wait.
I know it will be.
Summer's going to be massive because if they're starting to list homes now, we could end up with a lot of listings on the market by the time summer rolls around.
We could, and then but again, if interest rates continue to come down and people get more borrowing power, those listings there's a lot of buyers that are out there waiting. And it'll hit a certain point where interest rates are good for them, and they'll come out in droves, and they'll scoop those listings up. Hopefully we have enough listings on the market to absorb that buyer rush that will eventually come.
Sounds like we are going to, though.
Yes. Right now we're sitting in a balanced market. I think we've got about 3.5 months of inventory, which is sitting right. That's good. That's typical. Your average days on market is sitting around a month across the board for Ottawa. It's a very balanced, typical Ottawa market right now. I think people are still, they're still thinking about that COVID time, and that's what they think the market's like. That's why they think the market's a little bit slower. But like when I first got started 12 years ago, this was normal. This is just a normal Ottawa
3
market.
3 months of inventory is normal.
Exactly. So it's a good balanced market, and things are still moving. Definitely, things are still moving. They're just not moving at the pace that they were a couple of years ago. But it's a good balanced market. It's still performing well.
Frank, if we get a rate hold in March, what are the odds we'd get a 50 basis point cut in April?
Well, it all depends on how heavy the tariffs are, because really that's what it comes down to. Projected before all the tariff talk started, the projections were that Bank of Canada were likely going to drop about 1% in 2025. So far, we've seen a quarter point. So if things were normal, I think we probably would have seen another quarter point in March or April, and then another quarter point in June. And I think we would have seen it in that direction. But with tariffs, I think that if the tariffs, especially the automotive ones, if the automotive ones go into effect, I think we'll see a half point, maybe a 3/4 point drop in April.
Wow.
That's how severe it could be.
That would be huge. Luckily, there's no volatility in the market at all, right, Sean?
Well, exactly. You know what?
If I want to invest, I can invest pretty safely anywhere, right?
We can certainly get into that. That's the one thing that we certainly take pride in investing in local Ottawa real estate, where there's, as Jonathan said, a lot more consistency than some of the other marketplaces.
No kidding.
Yeah.
It's going to be insane.
Yeah. No,
would you invest in the stock market right now?
Well, it's you know what? It's right now, not at all. Just because there's so many balls in the air, as we've all said, and we all know that tariffs are inflationary, right? And unfortunately, and then you also have Donald Trump on the other side saying that he wants to lower rates and putting pressure to lower rates
in the States.
In the States, exactly, right? And as Frank said, there's probably not much of a chance of that happening anytime soon.
We could end up with a 50-cent dollar.
Yeah. And I can tell you just how expensive Florida was when I was there last week with the kids. We're not going to be doing that anytime soon.
Yeah, it's crazy.
Yeah,
huh?
Yeah, for sure.
So what are we at now? I guess we're below 70 right now, the Canadian dollar.
Yeah, I haven't looked in the last week or so.
Yeah, either have I.
I haven't paid the bill yet from last week. So.
Yeah. Oh, you'll notice when it comes in.
Exactly.
521-TALK, 521-8255. We will be right back. Welcome back. Jonathan in for Paul. Sean in for Frank. Well, Frank in for Frank, too. I'm the only constant in this bloody show.
Death, taxes, and Steve being here.
Taxes, death, and Gregory. Speaking of taxes, tax season is coming up, which means I've got TFSAs, I got RSPs. What am I going to do with all that?
Yeah.
Where can I put some of the RSPs and TFSAs, Sean?
Well, exactly. It's always that time of year where people reevaluate sort of, okay, what happened to my tax, situation last year, and what do I need to make changes for this coming year as well, so that can lighten the blow when it comes to the tax bill. But at Advanced MIC, and that's something that we obviously have the ability to do, is to take on people's RSPs, RESPs for their kids' education, TFSAs, and defer that tax sometimes for individuals that they always look for.
Tell us what Advanced MIC is.
And that's, we always get caught up in talking about the markets and talking about different things, but sometimes just simplifying what we actually do at Advanced MIC. So we have the opportunity of providing, we do two functions really. So we provide private mortgages to individuals that don't qualify for traditional lending. And those borrowers that come to us, they're coming to us usually for a short-term need, private financing. Maybe it is paying a tax bill that they haven't paid. Maybe it's people that are self-employed that just don't declare quite enough income on paper. So they need another year or so to bump up their income and then move on to a traditional lender. And then on the other side, we have our investors. And that's where we obviously get the money that we lend out to individuals, to our borrowers. And our investors, they, again, RSPs, TFSAs, they're purchasing shares inside of our portfolio, and it's very simple math. One share is $1, and most of our investors, they do what's called the DRIP, where they're reinvesting every month. They're purchasing more shares with their reinvestment of our distribution to our investors, which we do. Right now, we have a target of 8.25% for our fiscal year for 2025 to our overall return for our investors, which is a very consistent return, especially when we talk about markets that can be very inconsistent and volatile from day to day, really, when it comes into the news.
You've had that consistency for a long time.
Yeah, we have. We've always, been around that high sevens, low eights from a return. Last year, we were just over 8% return. And as rates continue to lower, we're still, from our side of things, our portfolio, it takes time to pay off mortgages. So we're going to benefit for our investors until we can start discharging the mortgages, that the rates are still on our books at a relatively high yield to get to that 8.25% that we hope to achieve.
How big is your pool right now?
Yeah, we're just under around 75 million. 77 million under assets.
Most of it local?
Yeah, it local. And that is, again, when you start talking about volatility in different markets, whether it is, I look at if you're in the steel region of Hamilton, automotive industry in Durham region, or, Southwest Ontario and London and Cambridge and things like that really rely on that. Jonathan, you said, we have a strong government backing, obviously, and employment in Ottawa, and we bring that consistency. So when we look at most of our files were 80%, 85%, in Ottawa and Eastern Ontario. And that's, having that local knowledge is always important when you're adjudicating and underwriting mortgage files, having a good understanding of the markets that you're dealing with.
What would the average credit rating be of a borrower?
Yeah, it always, for us, it's very strong, because we are never, when we go out and advertise to our brokers, we tell our brokers that bring us our mortgage files that we are not a lender of last resort. As much as we are a private lender, we're certainly not a mortgage lender of last resort. And our average score dictates or shows that, demonstrates with around 720, 730. Is consistent in our portfolio. Our loan to value is always under 70% on our portfolio. Again, we're a conservative lender, and our investors truly like that consistency. They like that local investment because they have an understanding how real estate is done locally, and it really puts to mind, or their minds to ease, especially in such a volatile time.
Yeah, because the assumption for a private lender would be, horrible credit rating, trouble and dodge.
Yeah. And you know what? They're very well. There are private lenders that, they do that, and maybe they do pay a bit of a higher return, but as the old saying always is, higher return, higher risk.
Yeah.
And we certainly we've never had any investor come to us asking for higher return because they're very comfortable with the risk portfolio and the risk profile that we have overall in our entire portfolio.
And the investment is in a pool of mortgages.
It is, right? So and I have many conversations with individuals that, they're trying to, okay, I hear I could really benefit from maybe doing private mortgages myself. And right off the bat, I start to dive into that, right? It's a great concept, but if you don't have the knowledge and the ability to underwrite and adjudicate a file, that can be very stressful, right? What happens if a borrower doesn't pay and so on and so forth? That risk, you're assuming that risk all by yourself if you're doing, say, a single mortgage with your own funds.
Yeah.
Whereas in a pool such as ourselves at the Mortgage Investment Company, we're spreading that risk and it's shared. So you're purchasing shares of the entire pool of funds that we're lending out.
What is it like for you to just sit here right now and hear how intelligent these questions are?
I am actually. You must have really worked hard on these last night. You always surprise me. No rehearsal either.
How do we invest?
Yeah, so you can always just go to our website. That's the easiest, advancedmic.com. And as well, you can always reach out to me. Via email is usually the best at Sean, spelled SEAN, the letter R for Reed. So Sean R at advancedgroup.ca.
Advancedgroup.ca?
Advancedgroup.ca.
So not advanced Mic.
Yeah, exactly.
.ca.
Don't get me started on that, okay? Don't get me started on
that. Can we not get happy on this? Let's
come on now. No. Yeah.
Well, that's fantastic.
Yeah, you know what?
Do you have a busy season?
You know what? We always have. There's always a need for private. Like we're seeing now, we're seeing borrowers coming to us last minute at the end of the month. It never fails. Deals get fallen apart because of a variety of reasons. Maybe they didn't sell their house, or maybe someone backed out of selling their house. We haven't quite seen that, but typically some people are purchasing houses that they haven't sold their house. And we're seeing that now again. And it's just circa 3 years ago. And now, so we come up with creative solutions.
But do you have a busy time for investors, though? Or are there times
right
of the
now
year
is an extremely busy time because people are looking at, again, their taxes that they're going to owe. How do I change things from last year? RSP deadline's coming up in March, right? So it is certainly a busy time.
So I can use RSPs, I can use TFSAs,
RESPs, even the first time the first time home buyers TFSA as well. That's
oh really?
Yeah, that's certainly eligible as well in our pool.
Wow. Mm-hmm. You're going to invest all your money, Jonathan?
Yeah.
There
Actually,
we go.
After what Sean just said there, I'm silly not to. Having a coffee with Sean after this radio show.
Consistency is certainly our key. It truly is. And again, it alleviates a lot of stress on people. We tell people it's a turnkey investment, right? And people that do come to me wanting to talk about individual mortgages that they invest, that's great. And 9 times out of 10, they're going to work out fine. But the next thing, the other challenge with that is, how are you going to find your next deal? So now you could be actually sitting on idle capital, constantly trying to search for the next deal when that mortgage discharges and so on and so forth. That's a job in itself.
Yeah.
Right. So we take that on and we service all of those mortgages. We find the mortgages, and that's certainly our job to generate that revenue for our investors.
How long do I have to keep my investment?
We do have a waiting period, so that's in our offering memorandum that we give to all of our investors and at conversations we have at the onset, because we have to make sure it's a suitable investment for people. And liquidity, when you're getting into private equity, which we do, is always a topic of conversation. So we have until the end of the following quarter to give our investors back their funds. But again, we have that conversation up front with everybody so that they know. And if it's a short-term investment that people are looking for, we usually steer them into another vehicle that's probably more appropriate for them.
How long do people stay with you usually?
Again,
investors. I mean,
investors. Yeah, no, they're twofold. We really have consistent investors that have been with us from day one, so just over 10 years.
Rolling money back in.
Yeah, rolling money back in. Going through the ups and downs of the market, taking a little bit more out of the market, putting them in. There's really that long track record for sure.
And what would the average mortgage length be?
A Just under a year, so about 7 months, seven and a half months.
People are in and out.
And that's the difference between us and a traditional lender. Traditional lenders try to hold on to their borrowers, right? Yeah. That they're trying to renew. It's a very competitive marketplace with a traditional lender because they want the people to stay on as long as they can. For us, that assumes there's a lot of risk the longer a borrower is on with us, right? We're charging a little bit higher of a premium on those mortgages because they can't get service somewhere else. So there's also a breaking point with that. So we want to make sure that we're helping people in the short term to be able to move on to traditional lenders, which is why 7 to 8 months is usually our turnaround time on our portfolio for our borrowers.
All right, give us the website again.
Yeah, advancedmic.com.
And your email?
Sean R. advancedgroup.ca.
And why are they different?
Take that up with somebody else.
521-TALK, 521-825. Welcome back to the show. Jonathan is here. Sean is here. Frank is here. Frank, you still with us? Just got to make sure.
I'm with you.
I heard some pounding on the phone before, but...
I learned so much the last segment. Hey, I'm good.
Yeah, I know. So how much are you investing now?
I'm in already, obviously.
I figured you would be.
Yeah. Sean's right. I mean, it really is short term, and there has to be an exit strategy. I mean, the whole purpose of putting a client in a private mortgage is that there is an exit strategy. So, like Sean said, it might be that somebody hasn't sold their home yet. So once their home sells, then they'll be able to get back into traditional financing. Or they're going through a separation, and the separation agreement's not in place yet. So again, those are critical things that are needed to get traditional financing. Or you might have some back taxes that you have to pay, and traditional lenders don't necessarily lend if you've got CRA outstanding balances. So again, they're meant to be short-term solutions with an exit strategy as well. So that's why, when you ask Sean how long are the mortgages, they're less than a year.
Yeah.
That's the reason behind that.
You're talking about separation and divorce. Those are the most fun clients to have, Jonathan?
They can be lucrative sometimes. No, those can be difficult for sure. A lot of moving parts.
Having been through it a couple of times, I can tell you firsthand. It's a lot of fun.
There's a lot of moving parts. And
I signed. How about you? No. What?
Yeah, exactly. A lot of times agreements are reached and then backed out of, and it's usually one person that's kind of holding up the other person. They're tough. They're really, really
But
difficult.
that's where experience comes in, right?
It is where experience comes in. Maturity comes in.
Talk about holding people's hands at a distance, right?
That's right.
You have to hold each one.
That's right. And you can't play favorites either. I think that's the big thing is that you can't favorite one over the other because that'll alienate the other person. You've got to treat them both equally the same, treat them with respect, and do your best to guide them through the situation, but they are
How
difficult.
many times does it happen when one person wants to make the deal and the other person does not?
All the time. Mm-hmm. I would say almost all the time.
Yeah.
And usually it's because one of the person's scorned at the other one.
Well,
right?
sure, yeah.
And they're going, no, you're not moving on. I'm not going to allow this to happen. Even though the deal can be completely fair, you'll hear about the contents of the deal that they made with the separation agreement. You go, yeah, this is really fair. And then push comes to shove, and no, I'm not signing that. And then you're right back to square one.
Well, that makes it difficult for the purchaser, too.
Makes it very difficult for the purchaser. Being the purchaser, it's really, really difficult when those things happen. It's
because you put in a fair offer. One wants it, the other one doesn't, and you're in a situation going, well, okay, give me a few minutes to talk about this.
Exactly. And again, it's trying to get everybody on the same page, and it's not easy. It's not easy, and it's not fun. It really isn't fun at all.
Are there people at Paul Rushforth Real Estate that are better at it than others?
No, I wouldn't say so.
No.
I'd say everybody at Paul Rushforth's pretty experienced in all aspects. I wouldn't choose one person over another there.
Yeah. So if you're getting separated, should I just call you?
You should just call me. I agree with that one 100%. 100% you should.
You know, and I had this conversation with somebody yesterday, talking just about our portfolio again, and not being a lender of last resort, and sorry to step in here, but I thought it was important. Sometimes in our experience, and Frank can attest to this, when we look at a credit bureau, you can have a habitual person who pays poorly, and you see that in their credit, right? And you see late payments, you see maxed out credit cards, and so on and so forth. And then you also see, this is where we will take on an individual that has poor credit, is that it's an isolated incident. And sometimes it's very much, I've separated. Yeah. I've gone through, 2 incomes in one household, trying to make things work with one income. and that is isolated. Exactly. Yeah. And you're trying to help and move people on into that. That's not their normal habits. They'll correct and go back to their normal habits, and it's an isolated incident.
And we run into that a lot with tenants.
Yes.
There's a separation that happens. Either they can't afford to get into a house at that point in time, or it's just not the right timing for them. We'll run a credit check on them, and their credit score comes up iffy. And just like Sean was saying, it's an isolated incident.
You got to look deeper, right?
You got to look deeper. You got to look under the covers a bit, because you can see from their history that, hey, everything was going really well up until such and such a date, and then it got off the rails.
Yeah,
and
what happened?
It's exactly. You just kind of find out what happens, and then that's relaying to the landlord in those situations. Like, you know what? We know the credit score is not where we want it to be.
Yeah.
But here's what happened, and this person was good for X number of years, and then for a year or two it fell off. But this is what they were going through. Life came at them a little bit differently here. And we run into it with tenants a lot in those situations.
Mm-hmm. So are you running into situations where one wants to buy the other one out for that short period of time
there's,
and come to you?
Yeah, we there are actual programs, and Frank can speak to that through traditional lenders that have the ability to do that, to pay out and even go up to a high ratio mortgage. I don't want to speak too much out of turn here, Frank, but I did have experience in that in previous roles. But there are those opportunities to do that, which is just a spousal buyout. So you are technically purchasing the house from a spouse, or you can do it also through traditional refinance as well. And again, if we need to, we can certainly help out on our lender side, but we don't see too many of those on our side.
You see many, Frank?
We do actually had one this week, but the critical part of it all is that separation agreement. And, a lot of times that separation agreement can take longer than one's expecting, because they might be on the same page, except for a lawyer may talk them out of something, and then all of a sudden they start bickering back and forth, and it delays it all. But I say to everybody, if you're separating and you want to take over the house, one of the parties wants to take over the house, and at the same time, there might be a truck loan in there that's joint, and you're including that. You need to include everything in the separation agreement, because if you do that, then it's the only time we have the ability to refinance the property to as much as 95%, as long as there's a separation agreement. If there's not a separation agreement, then the maximum you can go to is the 80% of the value of the home. So it does make a big difference if you're in a scenario where you need to tap into as much equity as possible to make it happen.
It can be done without a separation agreement?
Cannot be done with without a separation agreement, you can refinance to 80%. Now, again, your traditional lender may opt out, so we may have to go to private lenders, but at least there's an option. If you're looking to refinance above the 80%, so you're trying to get more equity out to get you to the 90-95%, a separation agreement must be in place, agreed to, signed, and even notarized for the default insurer and the lender to be able to move forward.
But who would lend money without a separation agreement?
Well, a private lender might, if there's a scenario where they're just working out, how much of the pension. So in a lot of cases, it's not even they've agreed to the child custody. They've agreed to what the alimony is, because there is a schedule for child support, a provincial schedule that they use. But the holdup might be something like their pensions, because they both have pensions. So that might be the holdup, just getting the right calculation. So in scenarios like that, an alternate or private lender might be able to move forward. Your traditional lender wouldn't move forward on it.
Yeah, and I don't want to, from our side, we look at, Steve, from as a private lender, every deal is unique, right? And we have to get the story. We have to look at it. So I don't want every mortgage broker coming to us with someone that doesn't have a separation agreement in town. And God love them all, but no.
I'm sure that number would be quite high.
Yes, exactly. But again, what's the story, right? And we look at exit strategies from our side to protect our investors' capital and their income and their retirement funds and whatnot. But we have to certainly make sure that we know the story. And we can do our due diligence on our side and really evaluate. We're not tied, such as a regulated institution that has to follow guidelines from their practices and whatnot. But we still have to make sound decisions.
Now, Frank, we got 60% of mortgages coming due this year. 60%. of Canadians are renewing their mortgage this year?
I think it's this year, next year. I think it's the next 2 years, the next 24 months.
All right. I read the wrong.
ChatGPT was wrong.
I read. What's her name again? Now, those are coming up from about 1 to about 4.5, right?
Well, that's the problem for a lot of Canadians, and that's what keeps them up at nighttime, is the fact that, most of these mortgages are coming up for maturity, happened during COVID when interest rates plummeted, and therefore a lot of Canadians are sitting on mortgage rates that range anywhere from the 1.5% range to, 2.5% to 3%. So all of a sudden you're having to get into the 4s because that's where rates are at now. So, it keeps Canadians up at nighttime. They are a little worried. Of all the surveys that are done, you'll see that that's one of the things that stresses Canadians out the most, and they want to make sure that they stay in their homes. I mean, the blessing in all of this is anybody that purchased a home 5 years ago, even 4 years ago, the value of their home has gone up tremendously. They've got some equity in there. They're able to refinance and keep their payments similar if they bring it back up to 30 years. So even somebody that bought with 5% down back in 2020 probably has anywhere between 30 to 40% equity in their home now, based on the value of their home and based on the fact that they've had such a low interest rate over the last 5 years that a lot of that payment that they were making has gone to the principal. So their principal balance has come down nicely. Therefore, they're in a much stronger position to be able to cope with this. And I say to everyone, just because you're going back to a 30-year amortization doesn't mean it's going to take you 30 years to pay off your mortgage. All it means is that during the cycle that we're in right now, where rates seem to be a little elevated, hopefully rates will come back down into the 2s and the 3s, and then you'll be able to get that amortization back in line. But maybe for the next 2, 3, 4 years, you may have to just cope with the higher amortization.
Why is the 5-year rate up this week?
5-year rate's up this week because the bond market's gone up because the U.S. inflation numbers came out a week ago and they were strong. But what we are seeing, at least what we're seeing, is we're seeing normalization come back into play where, not the 1 and the 2 year, but the 3, 4, and 5 at least go in chronological order now, where the 3-year rate with some lenders is lower than the 5-year rate. So we haven't seen that for a couple of years. And now we're starting to get back to that. Hopefully within time, we'll see the 1 and the 2-year rates come down as well. So that, because right now, I mean, for most Canadians feel that interest rates are coming down, but the difference between a 3 and a 5 year is negligible. They'd like to take a 1 year. The problem is that the 1 year mortgage is 2% higher than a 3 year. So they're not really comfortable taking a 3 year. They'd rather take a 1 year, but they don't want to pay that much of a premium to take a 1 year. That's where the variable comes in. But again, there's a lot of Canadians that are very conservative by nature and get a little nervous because they don't understand what a variable adjustable rate mortgage is. They think they're in it for the entire 5-year period, when in actuality, you have the ability at any time to convert that from an adjustable variable to a fixed rate mortgage, and it doesn't cost you anything.
Are you still managing to get prime minus 0.85 these days?
Very, very few lenders go that high now. We're seeing more prime minus 75. Anywhere between prime minus a half to prime minus 75 seems to be common. We're fingers crossed, hopeful that we're going to get back to between prime less 75 and prime less 1 over the next couple of months, especially if tariffs hit. There's a good chance we might be able to see that come back.
521-TALK, 521-8255. We will be right back. Welcome back to the show. Jonathan in for Paul. Sean is here investing our money. Frank is wherever, making the world better.
That's right.
Did we just agree we were, things are going so well today that we might just take over? I don't know.
Apparently we don't need you and Paul anymore, Frank.
Oh, come on.
We love you at heart, though. Don't worry.
You know why I need you? You know why I miss you? I had to buy my own coffee today.
Uh-huh.
Oh, come on now. I offered.
Yeah, that's
true.
I did
offer.
I actually bought you one, Steve.
I know.
Thanks, Greg. Appreciate that coffee.
All right, Jonathan, if I want to get my house ready to sell and I want it to start looking good, what's the time frame I'm looking at?
How long?
By the time we get Greg in for photos and me making changes that I have to make. And
every seller's different. For like people with kids, it takes a little bit longer, right? They've got to get rid of the toys and get everything. It takes a little bit longer with kids, for sure. I was at a place last night, and Unfortunately, the father had to move into an assisted care living. So the daughter and her husband were taking care of everything. They had the place looking great. It took them a weekend. You know, so there's nobody in the way. There's no pets there. It's every seller's a little bit different. And also the condition of the house too, right? If you've got a lot of stuff, it's going to take you a long time to get rid of that stuff. And some people have a tough time throwing out stuff.
Look at
as Greg has seen before.
Mr. Photoshop going, how much do you erase?
Oh, yeah. And then you'll go in and, pop open a closet. It's just stuff to the brim. Stuff's falling out on top of you. But
it's worth storage, right?
It is worth storage. You want to maximize the space in your home. You want to allow people to walk around, and again, maximizing that space. That's the big thing I tell all of my sellers. Just declutter. We all do it. We all
declutter and color, right? Nice and bright.
Oh, yeah. I don't often talk about paint unless it's really, really offensive or dated. Because most of the time,
so we're still going with the oranges and purples.
Sometimes I know I've got a listing coming up here in a couple of months, and we discussed it. It's a single gentleman, and he said, "You know what? I'm not interested in painting." I said, "You know what? We might be able to net you a little bit more money here." He goes, "I'm not interested in it. I really don't care. Let's just get this place sold." The paint colors would have been from the early 2000s, late 90s, so
not horrible.
No, not horrible.
Not 70s.
No, not 70s. Not 70s.
I bought a place once. I mean, you really have to be able to look beyond.
You do.
Mm-hmm. I bought a place that had purple wallpaper. It was just,
it
was unbelievable. But you know what? In one weekend, it was gone. It looked great.
And that's it. And most buyers are going to come in and do it anyways. Even if you change that paint color, they're going to come in and change it again anyways. So, like, for me, it's just declutter, and have it clean. Make sure the place is clean. Yeah. It's got to show well.
And buyers should expect to paint, right? Because as soon as you take down those pictures...
Yep. You got to patch or TV brackets, all of those things, right?
Yeah, you're supposed to fill the holes, I guess, are you?
Well, you're supposed to fill them.
Doesn't always happen that way.
Well, you get a little bit of weekend warrior work going on in there, right, with the patching. So it's not exactly clean and professionally done.
Yeah, so you're going to throw a coat of paint anyway.
Most of the time, yeah. I would say 90% of the time, a buyer's going in there and... I'll show up with a little gift a couple of weeks later, and they're either painting or the place has already been painted.
That's why it's nice if you can give yourself some time between buying and closing. Eh?
Yes, if you can get a little bit of an overlap, a week or 2 weeks. First of all, it helps out with the move. There's nothing worse than trying to move everything in a weekend or in a day because of the closing dates not matching
up. And then hope you get the key.
And that's it. It's very stressful. So, no, if you can get a week or two, kind of pitter-patter at it, a couple things here, a couple things there, it lowers your stress. It makes the move a lot more enjoyable, definitely.
Hey, Frank, I was reading an article this week that you need $141,500 a year in salary with 20% down to afford a house in Ottawa.
It's crazy, eh?
141,420. And forget about Vancouver. Vancouver's $243,000 and Toronto's $223,000. So I guess it's still a bargain here.
It is a bit of a bargain here.
Not really. I mean, a single person can't buy a house pretty well. I mean, that's the problem is now, you're looking at either couples both having to be working to buy a home, or you're looking at friends buying a home together because they just individually they can't afford to buy it. And again, I mean, it creates potential problems down the road if something were to happen with the relationship. So, you really got to put a lot of thought into buying it, and you really got to dot the I's, cross the T's if you're buying it with someone else to make sure that your assets are protected should something go sour with the relationship.
Here's an interesting number. 31% of first-time homebuyers in Canada last year got financial help from family members compared to just 20% in 2015. So we're already up to 31%.
And that number is likely going up.
Yeah, and it is going up, yeah.
Yep, it's different. We live in a different world, and, that's why I think the builders are pulling back a little bit because they're finding less and less buyers. That's why these interest rates need to come down. Otherwise, it's going to be a stale market for years to come.
Birthdays, Frank?
I've got a few. I've got Rose from our office, who's a broker out in Edmonton, celebrating her birthday. Zena from our office celebrating her birthday, and Sandy, who runs our sales support team, celebrates her birthday this week. My good friend Alfio, his son Marco, who's an awesome little soccer player, turned 30 this week, so happy birthday to Marco. And then my buddy Pat, who is a paver during the summer and a parking instructor during the winter, celebrate his birthday. So happy birthday to Pat as well.
What's a parking instructor?
Yeah.
I'm mocking him. He's not a very good parker. Let's put it that way.
Website, Sean?
Advancedmic.com, and you can also give us a call at 613-656-0017. We'd be glad to take those calls.
Email?
Sean R. at advancedgroup.ca.
Jonathan, how do we get a hold of you?
613-788-2122. And by email, Jonathan, Jonathan, at paulrushforth.com.
At paulrushforth.com. That's ironic.
I know.
Yeah, it's just like the website.
It's just like the website, exactly.
Like the website.
That good continuity.
All right, Frank, give us your line.
Hey, please support local Canadian charities and local businesses. And Canada made us proud on Thursday night.
Yes, sir.
Absolutely.
Have a great week, boys.